Here's the thing that nobody mentions in those debt relief ads. There's a hidden cost that shows up months after you settle your debt, and you could be hit with a massive bill if you're not prepared. But there's a way out that 80% of people qualify for and never even use. Imagine that you finally settle that $20,000 credit card debt for $10,000. You're celebrating. The weight's off your shoulders. You can breathe again. You're finally debt-free for the first time in years. Then April comes and you get a form in the mail, a 1099-C from the IRS. It says you earned $10,000 in income last year, but you didn't earn anything. That was forgiven debt. But the IRS doesn't care. They want taxes on it. And depending on your tax bracket, you could owe $2,000 to $3,000 in taxes on debt you already struggled to pay. Nobody warned you about this, and suddenly your fresh start feels like another trap. This is why consequences matter. Everybody talks about getting out of debt, but nobody talks about what happens after. And the aftermath can be just as brutal as the debt itself if you're not prepared. So here are the debt relief consequences you should be aware of. Credit impact. Your credit score will take a hit with debt settlement. That's because when you stop making payments to creditors, those missed payments will get reported and your score drops. But here's the key. Once you're debt free, you can start rebuilding. Plus, if you're already behind on payments or if your accounts are already in collections, your credit's already tanked. It's already bad. The real question isn't, will this hurt my credit? It's, would I rather have bad credit and $20,000 in debt or bad credit and zero debt with a chance to rebuild it? I think the choice is pretty clear. Another big consequence is legal. If you default and do nothing, just ignore it and hope it goes away, you'll likely get sued. Creditors can garnish your wages, seize your bank accounts, and in some cases put liens on your property. The last one is a big one, tax consequences. This is the one that catches people off guard the most. The rule is, if a creditor forgives $600 or more of your debt, the IRS considers that taxable income and you'll get a 1099-C in the mail. So if you settle a $20,000 debt for $10,000, that other $10,000 in forgiven debt might be taxable income. But like I mentioned before, there is a way out that most people qualify for but never use. It's called the insolvency exception. If you were insolvent at the time your debt was forgiven, meaning your total debts exceeded your total assets, you may not have to pay debt on the forgiven amount. You just have to prove it to the IRS by filling out Form 982. It's as easy as that. Bottom line, debt relief consequences are real and serious, but they're also manageable if you're prepared and you know the workarounds. Tell me in the comments, did you know that the IRS could tax forgiven debt? And here's the real question. Has a debt settlement company ever told you that before you enrolled?